Hey YouTube, welcome to the September 2019 update for Project 1 Million. And if you're interested to know what Project 1 Million is about, I've created this playlist on my channel homepage and I've added in the videos starting from the very first video I did in January 2019 and when I launched Project 1 Million in July 2019, and henceforth we have the monthly updates here. And you can see from my very first video, and you can see we started our journey on 5th Jan 2019 with our very first video, and in that video we had a capital base of about 117,000 and we hold the same stocks we still hold today. So let's get into this update. Account has grown to about 150,000 plus and is up to 23% year to date. Let's get into it. So we're logged into the account and let's have a look at the holdings. So first up, we have Amazon at about 19.82%. Then we have Facebook at about 15.23%. We have Alphabet, this is the Class C shares, and we have 11.7% of that. We have Visa at 8.66%. Up next, we have Booking Holdings at 7.74%. We have Alibaba at 5.74%. We have MasterCard at 4.43%. We have the other class of Alphabet Class A at 3.91%. So you can see together Class C and Class A bring Alphabet right up to about 16+%. So it's the second biggest holding in our Project 1 Million portfolio. Let's move on. We have Intuitive Surgical at about 3.36%. We have Boeing at 2.15%. We have Costco at 1.93%. And I'm going to show you the other shares right here. We have Nike, Apple, Comcast, Expedia, Welltower, S&P Global, Walt Disney, JD, FedEx, and Berkshire Hathaway, and that rounds out all the equities that we hold, which makes up about 95.78% of this portfolio. We also have some ETFs. We have the S&P 500 ETF, and that makes up about 2.88% of this portfolio. And finally, we are holding some cash of about 2,000 plus, which makes up about 1.35% of this portfolio. So you can see that I like to stay invested and we are going to ride the wave for the stock market. So there was a lot of volatility in August, especially with the escalation of the trade war between the US and China. But let's see what that meant for the account. So let's look at the history tab of this account. So what happened in August? Well, we collected some dividends. You can see dividends from Welltower, you can see dividends from Apple, and you can see some dividends from MasterCard. We added some money on the 6th of August 2019, and we also had the opportunity to purchase some shares of MasterCard on the 5th of August 2019. I believe this was when MasterCard was available at $260. So I found it a good buy opportunity and I decided to buy some more MasterCard shares. So as we mentioned, the account did about 23.7% year to date. So that's a good performance, but what we want is we want to beat the market. So let's compare our performance against the performance of the market. So what I use as a barometer of the market is the S&P 500 ETF SPY, and we can see that the SPY ETF did about 17%. Then the other ETF I use is the Nasdaq 100 ETF, and that has done about 20%. I also use two high quality ETFs called VJT and IGM. These are the tickers. And let's look at VJT. VJT has done about 28%. IGM has done 26%. So they are slightly beating our Project 1 Million portfolio. And finally, I like to compare our performance against the best funds out there, managed by the best fund managers. And I've identified Berkshire Focus as a good fund to compare against, and Berkshire Focus has done about 33.95% year to date. So the Berkshire Focus Fund has done really well this year, and I might even think about adding some shares to Project 1 million. But I've also identified a SaaS ETF, Software as a Service ETF, called Invesco Dynamic Software, and the ticker is PSJ. And that has also done quite well and is done almost as good as Berkshire Focus at about 32% this year. So you can see this year has been a good year for the SaaS industry. And finally, let's look at the Fundsmith Fund. And I'm a big fan of Fundsmith because Terry Smith is a very good fund manager. Let's look at some of the holdings he has. You can see these are the holdings he has in his fund. He has PayPal, he has Microsoft, he has Philip Morris, he has IDEX, he has Facebook, Intuitive, Stryker, Estee Lauder, Amadeus, PepsiCo. Some good high quality companies. And let's take a look at his returns year to date. And you can see here his year to date returns are about 29.92%, and those are very good returns. But I would like to issue a caveat here. The pound has dropped a lot against the US dollar, so that has inflated the returns a little. So the returns in net US dollar terms will be probably lesser. But overall, he has done about 19.45% per annum over the last 8 years, and that's why I like to compare my performance against his fund. So that's a wrap for this video. I hope you enjoyed it. If you do, please remember to subscribe if you haven't for all the monthly updates. Please like, please share. Remember, I'm just an average investor aiming to outperform the market. I hope to have you along with me in this journey towards 1 million. And we'll see you in the next video. Have a great day. Hey YouTube, welcome to the October 2019 update for Project 1 million. Project 1 million was launched in July 2019, and we update our portfolio every month. And in this video, we will look at the performance of the portfolio, any major changes in the portfolio, and finally we compare our portfolio performance against the best ETFs and funds out there. So let's take a look at how the portfolio did. So when we log into the account, this is the screen we see, and these are the stocks we hold. Shortly, we'll go into our Excel file to get a deeper understanding of the stocks we hold and the year-to-date percentage gain. There weren't many changes in the portfolio in September, except that, as I mentioned in the previous video, we had to change our broker from Charles Schwab to TD Ameritrade. So I'm still getting used to the new platform. I did do an option trade just a few days ago. Actually, I sold a put option on Upwork.com, and I've done a separate video on why I like Upwork.com. I'll do a separate video on this specific option trade, and I will let you know when it's out. Let's take a deeper dive into the stocks we hold. So we have Amazon at about 20% of the portfolio. We have Facebook at about 15% of the portfolio. We have Google Class C shares here at 12%, plus we have another class of Google at about 4%. So in total for Google, we have about 16% of the portfolio. We have Visa at about 8% of the portfolio. We have Booking Holdings at about 8% of the portfolio. We have Baba at about 6% of the portfolio. We have MasterCard at about 4% of the portfolio. We have Intuitive Surgical at about 4% of the portfolio as well. And you can take a look at the other stocks we own right here. And all these stocks add up to an equity portion shown here. we have a little cash as well shown here, and in total this is the total account value, and for the year we have done about 21.80%. Over time, I'm looking to run a more concentrated portfolio. So you could see some of the percentages of certain stocks going up or down. I will probably not be adding to Booking at the moment. I do intend to add more to Intuitive Surgical at the right price. I also want to buy more of Boeing at the right price, and I will also probably want to increase some of my exposure to S&P 500 Global at the right price as well. Now let's compare our performance against some of the best ETFs and funds out there. So we have the S&P 500, we have the Nasdaq 100, we have a ETF called VJT, which is the Vanguard Information Technology ETF, and we have the IGM ETF, which is an expanded tech ETF, and we have a fund called Berkshire Focus. Let's take a look at how these funds have done. So, as mentioned, we have done about 21.8% year to date. The S&P 500 has done about 17.33% year to date. The Nasdaq 100 has done about 19.19% year to date. Berkshire Focus has done about 24.32%. So we have beaten the S&P 500 and the Nasdaq, but we are losing out slightly to Berkshire Focus. IGM has done about 25%, and VJT takes the cake and has done about 28% year to date. That's a very good performance by VGT. So a do nothing ETF would have outperformed Project 1 million year to date. But I am not deterred, because I will compare my performance against these ETFs and funds over the 1 year, 3 year and 5 year periods, and those are the periods that really count. 1 year or less than a year is too short a time period to accurately judge and compare the performance of Project 1 million against these other ETFs and funds. Next, let's compare our performance against another fund that I follow. This fund is called Fund Smith and is managed by a portfolio called Terry Smith. The size of the fund is about 18.8 billion pounds. These are the top holdings in the fund. And let's look at the performance year to date. Performance year to date has been about 25.74%. So it is slightly outperforming the Project 1 million portfolio. But this fund is denominated in pounds, so it does have some currency exposure, and as the pound has dropped quite a bit, that has boosted the performance of this fund a little. So the third quarter of 2019 has been a little slow for the portfolio. The portfolio has gone nowhere basically since the third quarter. In general, the market has also gone nowhere in the third quarter. Many of the indexes are down, and Berkshire Focus is down about 7% as well. So I wouldn't be too worried about the performance of Project 1 million in the third quarter. As we saw last year, since the S&P 500 did very badly in 2018, I think it was minus 4%, naturally it would do well in 2019. So as the third quarter has been a little slow, I expect the future quarters to be more positive. At the end of every quarter, I also like to take a look at some of the best performing and worst performing stocks among the core positions in Project 1 Million. So on the screen, you have the year-to-date performances of the core holdings for Project 1 Million. And you can see that MasterCard has done very well so far this year at about 43.62%. Up next is Facebook at about 34%. Then comes Visa at about 32%. BABA looked like it was going a bit stronger until the last few days and now has come down to about 20.49%. The S&P 500, as mentioned, has done about 17.33%. And other stocks have underperformed the S&P 500, like Amazon, Google, Intuitive Surgical, and Booking, and Boeing. Some of these stocks I can understand why they have underperformed the S&P 500, like Boeing. But for the other stocks, I expect them to come back in the coming quarters. I still love their fundamentals and they look like very strong stocks going forward. So that is the update for October. Let me know what you thought of the update. If there are other things you'd like me to discuss in these monthly updates, let me know in the comments. Let me know what you think of my stocks. Do you think I should buy any particular stocks or sell any particular stocks? Let me know what you thought of this video. Please like and subscribe if you haven't already. Please let me know your feedback and I will see you in the next video. Hey YouTube, Project 1 Million did very well in October. The portfolio is up 28.3% year to date. Project 1 Million saw a gain of nearly 8,000 in October and is hitting all-time highs. Let's look at it in detail. Let's take a look at all the stocks in the Project 1 Million portfolio, but keep a focus on the core holdings. First up, we have Amazon at about 19%. We have Facebook at about 15%. We have Google 12% here, plus the other class, which is 4%. So in total, Google is about 16%. We have Visa at about 8%. We have Booking Holdings at about 8%. We have BABA at about 6%. We have MasterCard at about 4%. We have Intuitive Surgical at about 4%. And we have the S&P 500 at about 3%. I will say anything below the S&P 500 is not yet a core position of Project 1 Million, but you can take a look at some of the other stocks that could one day be a core position in Project 1 Million. A lot of these stocks have already reported Q3 earnings. I did a separate video on Amazon's earnings. It actually fell 7% immediately after its earnings release, but it nearly recovered the day after. All of the other companies that have released earnings so far, I think, did pretty well as well. I was particularly impressed with Facebook and the revenue acceleration that it saw. Google also saw some revenue acceleration. Visa and MasterCard were their usual steady Eddie selves. They consistently beat the market. I think Alibaba that is, also had very good earnings and it remains undervalued in my opinion. Intuitive Surgical popped a little after its earnings, but this is a long-term play and I'm sure over the long term it will go much higher. These are the stocks I'm putting my weight behind and I think they will help the portfolio reach the goal of Project 1 million in under 10 years. So, as mentioned, Project 1 million has done about 28.3% year to date. But what really matters is how our portfolio does against the market and against other top fund managers. So let's take a look at that. So this is how the market and some of the top fund managers have done year to date. We have the S&P 500, we have the Nasdaq 100 ETF, we have the VGT ETF, which is the Vanguard Information Technology ETF, we have the Expanded Tech ETFs, and we have Berkshire Focus Fund. If you want to know why I included some of the ETFs, I suggest check out my Dream Team ETF portfolio for why I chose some of these ETFs. So let's zoom in and take a look at how these ETFs and fund managers did. The S&P 500 did about 22.85%, the Nasdaq 100 did about 26%, the IGM ETF did about 31%, Berkshire Focus put in a strong showing, it's done about 33%, and VGT has done 36.33%. An incredible performance by a do nothing ETF. So far, the ETF has beaten Project 1 million and even Berkshire Focus, and the IGM ETF has also beaten Project 1 million, but we are beating the S&P 500 and the Nasdaq. Let's see how it goes in the next few months and of course in the next few years. Every month I also compare Project 1 million's performance against one of the best fund managers I know, Terry Smith, who manages the FundSmith Equity Fund. I also talked about how I started as an eToro fund manager in my last video. Terry Smith manages about $18.3 billion. I hope to manage a similar amount in the future. Let's see how that goes. These are Terry Smith's top 10 holdings. Currently in Project 1 million, I only own Facebook, but I definitely like some of the other stocks here, like Microsoft and PayPal. In fact, I picked up some PayPal shares for my eToro fund as well. Finally, let's take a look at how Terry Smith has done so far this year. Well, he's not doing too badly. He's slightly underperforming some of the ETFs. He has done about 22.61. So he's about level with the S&P 500. I think his performance fell a little because the pound strengthened a lot in the last few weeks. So YouTube, that is the update for November. If there are any other major developments, I will let you know. The market is nearing all-time highs. How has your portfolio done this year? Let us know in the comments below. And please subscribe if you haven't for all the updates on Project 1 million. If you would like to copy my investments, you can do so through the etoro platform. But remember, my investments are long-term investments. I buy only a few high-quality companies and I don't day trade or even trade much. I'd hardly sell companies once I own them. So bear that in mind if you do copy my investments, because I intend to hold these high quality companies for many years. If you enjoyed this update, please leave a like and we'll see you in the next video. have a great day. Hey YouTube, this is the December 2019 update for Project 1 Million. November was a good month for Project 1 Million. Let's go through the history of any transactions in November and let's take a look at the year-to-date performance of the portfolio. Project 1 Million is my attempt to grow a capital base of about 150k to 1 million in under 10 years. Let's look at the portfolio. I didn't buy or sell any new shares in November. In fact, I've not sold a single share the entire year. As part of the strategy to reach 1 million, I try to deposit about $1,000 into the account every month, on average. So in November, I deposited another $1,000+ into the account. I sold another put option on Upwork.com. I was probably a little too early on this put option because the price fell further. I also sold another put option on Baozun. Baozun is a leading e-commerce software provider in China, similar to Shopify. I will probably do a separate video on these put options and of course on a more detailed analysis on Baozun. Let's take a look at the portfolio allocation in our portfolio at the end of November. Amazon is still our top holding at about 19%. Google is 12% plus another 4%, which makes it 16%. And so Google is our second biggest holding. Facebook is our third biggest holding at about 15%. Our top three holdings make up about 50% of the portfolio. Our next top 5 stocks, Visa, Booking, Baba, MasterCard, and Intuitive Surgical, make up about 29% of the portfolio. So, our top 8 stocks make up about 80% of the portfolio. Every month, we compare our performance against the performances of the best indices and the best funds. So, let's take a look at how our portfolio did against the SPY, the S&P 500, against the VGT ETF, against IGM, the Expanded Tech ETF, Berkshire Focus Fund, and the Nasdaq ETF. So, the market has done about 25.6% plus. Project 1 Million has done about 28.7% year to date. The Nasdaq has done about 30%. IGM ETF has done about 35%. The Berkshire Focus Fund has done about 37%. And the Vanguard Information Technology ETF VGT has done about 41% year to date. Let's also take a look at how our fund performed against the FundsMate Equity Fund. The FundsMate Equity Fund manages about $18.3 billion. The FundsMate Equity Fund did a performance of about 25.36% year to date. So, we are beating this billion-dollar fund managed by Terry Smith. So, that's the update for December. We post regular updates on our eToro newsfeed. In that newsfeed, we post links to articles that we are reading and we provide our thoughts on developments in the stocks that we invest in. Check it out for more current updates. If you do not have an eToro account yet, you can use the link in the description tab and open up an account, and you will get an additional $50 if you use our link. The market has been on an incredible uptrend in 2019. This is our last update on the portfolio for 2019. We are still very bullish on our companies and we are holding on to these companies. We do not plan to sell any of these companies anytime soon. The underlying factor among all these companies is their strong and durable moat, and that will sustain their businesses for many years to come. That's the update for November. Let me know what your thoughts are on the companies we own, what you think about our performance, and any other comments you have. Have a great day, and we'll see you in the next update next year. Hey YouTube, Happy New Year, Happy 2020. So we did it. We beat the market in 2019, but only by a hair. I will get into the details of our performance in just a second. So at the end of 2019 and at the beginning of 2020, this is what our portfolio looks like. We have Amazon still as our top position at about 19%. Amazon had a slow 2019, but that means it is likely poised to outperform the S&P 500 in 2020. I am still very confident about Amazon and its prospects, especially in e-commerce, cloud computing, and advertising. Next, we have Facebook at about 15%. Facebook had an amazing 2019, but I still think it is a little undervalued, and so I plan to keep holding Facebook at the current rating. Next up, we have Google at about 12% and the other class of Google at 4%. So in total, we have 16% for Google. Google had a decent 2019, but Google is a powerhouse. It has YouTube, Android, of course Google Search, Google Maps, Chrome, and a lot of other interesting projects on the side. I plan to hold Google at the current rating for 2020, and I don't expect to make any changes to the top 3 positions. So together the top 3 stocks make up about 50% of the portfolio going into 2020. The performance of this portfolio in 2020 will largely depend on these 3 stocks: Amazon, Facebook, and Google. Let's look at the other top stocks in our portfolio. We have Visa at about 8%. Visa had an amazing 2019 as well. We have Booking at about 7%. Booking is one of the stocks that I feel I need to lower my exposure to. I had already thought about this in 2019 at the beginning, but I'm very hesitant to sell any shares because I usually get it wrong. So I did not sell any Booking shares and I did not trim my position. And going into 2020, I also plan to probably not trim my position, but I am not adding any more Booking shares at the moment. I will feel a little more comfortable with Booking at about 3 or at the most 4% of the portfolio. Let's see how it goes in 2020. Baba, or Alibaba that is the next biggest stock in our portfolio at about 6%. Then we have MasterCard at about 4%. Alibaba and MasterCard had a great 2019 as well. I think they delivered more than 50% returns in 2019 alone. Next up, we have Intuitive Surgical at about 4%. The top 8 stocks in my portfolio make up nearly 80% of this portfolio. So, this is a concentrated, high conviction portfolio. We believe strongly in these stocks. Let's take a look at the rest of the stocks in the portfolio. So we have some of the index at 3%. This is the S&P 500 index. And in hindsight, it was a good decision to include the S&P 500. Although I think one mistake I made in 2019 was not buying more of the Nasdaq ETF. The Nasdaq ETF, as we will see later in the video, had an amazing 2019. I had Apple at about 2%. In hindsight, of course, it seems like I made a big mistake in not buying Apple. But I don't have as much conviction in Apple as I do in the other stocks. So I am just maintaining my Apple position at about 2%. Nike at 2%. Costco at 2%. Boeing at 2%. I think Boeing was another mistake I made in 2019. After the second plane crash, when Boeing dipped to about $360, I thought that this would be a temporary setback for Boeing. So I decided to buy more Boeing shares at that time. Little did I know that the grounding of the 737 MAX would drag on for the entire year, and it has really created big problems for Boeing. It has lost its CEO and it has taken on much more debt. Boeing is not as strong as it was going into 2019. But I think Boeing over the long term is still a good company. I may buy more Boeing if it dips to around $315 or below. But currently, I am still holding on to my Boeing shares. Next, we have Comcast at 1%. We have S&P Global at 1%. S&P Global is another company that I wish I had bought more of in 2019. S&P Global is a company I understand well and is riding several tailwinds, including the tailwind of passive investing. Along with Moody's, it also has a monopoly in the debt rating market. And with the Fed cutting interest rates, that has been a boon to these companies because there are many more companies that are looking to issue debt at low interest rates. And to do that, they need to go to these credit rating agencies. So I'm looking for opportunities to buy more of S&P Global. I have Expedia at 1%. I have Welltower at 1%. Disney at 1%. Upwork at 1%. Upwork has been a disappointing stock so far in the last part of 2019 when I decided to buy it. But I'm still confident about Upwork over the next few years. So I don't plan to sell any more shares. Actually, I've not sold any shares. But I do actually plan to sell more put options if the price drops further. And that's what I've been doing as well for the last few months. I have JD at 1%, Berkshire Hathaway at 1%, FedEx at 1%, and recently I also sold some put options on Baozun. And my cash holding in the portfolio currently is at about 2%. So we have a total portfolio value of about $168,125.27. Our 2019 performance is 31.7%. A good result, but I think if I had not made some mistakes in 2019, it could be even higher. Let's see how it does in 2020. Over the last 30 days, this is the history of the account. We collected some dividends. We deposited some cash. We collected more dividends from Boeing. Earlier it was from Visa. We sold a put option on Upwork as mentioned and collected about $100. We collected dividends from S&P Global and we collected some dividends from Expedia. We did not buy or sell any stocks in December. Every month I compare the performance of my Project 1 Million portfolio against some of the best ETFs and the best funds I know of. So let's take a look at how Project 1 Million did against these benchmarks. So we have the S&P 500 ETF, we have the Nasdaq QQQ ETF, we have the Vanguard Information Technology ETF, we have the Expanded Tech Sector ETF, and we have a good mutual fund called Berkshire Focus. So the top performing index was Vanguard, and then it was IGM, followed by QQQ, the S&P 500, and Berkshire Focus. Look at that fall in Berkshire Focus. Berkshire Focus was beating Project 1 Million through most of the year, but it had a bad fall in the month of December. The better way actually to look at the performance of these benchmarks will be to look at the total return price, which includes dividends reinvested. So let's take a look at that. So the Vanguard has actually done 48.73%. IGM has done 41.91%. Berkshire Focus still not too bad, 39.90%. QQQ Nasdaq ETF 39.29%, and the S&P 500 has done 31.45% with dividends reinvested. The S&P 500 is my main benchmark for Project 1 Million. I want to beat the S&P 500 over the long term. As mentioned, Project 1 Million did 31.75% in 2019, and so we beat the S&P 500 by a slight margin only. But I think the performance in 2019 of these indices was probably an anomaly. It will not probably be repeated in 2020. And I think in down markets or in lull periods or when the market is not so hot, that is actually when Project 1 Million will outperform. So I'm eagerly looking forward to the performance of Project 1 Million in 2020. Let's also take a look at the performance of another popular mutual fund called Fundsmith. Fundsmith manages about $18.8 billion. These are the top holdings in Fundsmith. This is the performance for Fundsmith in 2019. We don't have the exact performance yet, but it will be in the ballpark of about 25.63%. So, Project 1 Million beat this $18 billion fund hands down in 2019. Let's take a look at the performance of the top holdings in Project 1 Million. So, the stock that did the best with dividends reinvested is MasterCard, with almost 60% return in 2019. Next up is Facebook at about 56%. Next up is Alibaba with 54% plus. Next up is Visa with 43.33%. Next, we have Alphabet, Google with 28%. Then we have Intuitive Surgical with 23%. We have Amazon with 23%. And we have Booking Holdings with 19%. All of these stocks did very well in 2019, even Booking Holdings. But some of these stocks had a blowout 2019, like MasterCard and Alibaba and Visa and Facebook. Going into 2020, I've told you that I feel confident about Amazon, especially since it had a low-key or relatively low-key 2019. I'm also confident about Intuitive Surgical and Google in 2020, and I expect them to do well. I expect all these stocks to do well, actually. But since MasterCard and Visa have increased in valuation so much in 2019, I don't expect them to do as well in 2020. But nonetheless, I'm not going to trim any of my positions in MasterCard or Visa. The market could surprise me, and these great businesses, MasterCard and Visa, could surprise me in 2020. So I'm holding on to them at the current weighting. Of course, none of these stocks performed as well as Warren Buffett's top pick, Apple. Apple had an incredible 2019 at nearly 90%. Of course, in hindsight, I wish I had invested more in Apple at the beginning of 2019, but that is not how investing works. Investing is forward-looking. Should I invest more in Apple now? As mentioned, I don't have as much conviction in Apple as I do in some of these other stocks. I feel Apple is vulnerable to technological change. If Samsung or Huawei or some other phone company comes up with an incredible new phone, I think masses will flock to that new phone. But Apple has a very sticky ecosystem and a very strong moat in that it has its own operating system and it has millions of developers making apps for its operating system. So I'm comfortable holding Apple, but going forward, I don't think it will be as good as some of these other stocks. Finally, but certainly not least, let's take a look at our eToro account. eToro will be very important for me in 2020. I am attempting to build a career as a fund manager on eToro. Let's take a look at our stats on eToro so far. So we only started our account on eToro somewhere in October. So for the year, on our eToro portfolio, which we started in October, we have done about 6.67%. This is a decent performance, I think, for 3 months. As with our Project 1 million portfolio, we are confident we can beat the market in 2020 with our eToro portfolio. So this is what the portfolio on eToro looks like at the moment. We managed to pick up some Google shares at the end of 2019. Our portfolio is still heavy on cash because it is a new portfolio, but we are dollar cost averaging into the same companies that we own in for Project 1 million. We had a good start because we managed to make some opportunistic buys in Adobe and PayPal as well for this eToro account. The good thing about eToro is that it allows fractional shares and it has 0 commissions. So that will allow us to be a little bit more opportunistic for our eToro portfolio as compared to our Project 1 million portfolio. If you're interested to copy my portfolio on eToro, the minimum copy amount I suggest is about 250. You should copy all trades and you should have a long-term mentality. We have about 110 followers so far, and I hope to convince more of them to copy my portfolio on eToro in 2020. I'm confident that together we can outperform the market again. If you don't have an eToro account yet, I suggest you open one up. You can use the link in the description tab to open the account, and you will get $50 to start trading if you use my link in the description tab. Please read the T's and C's. You have to make your first deposit of about $50 to $200 depending on where you live, and you have to close your first trade, and then you get your $50 bonus. eToro is a very interesting platform. It allows you to copy some of the best investors on that platform, and I highly suggest. I will continue to do more videos about some of the best investors I find on eToro as well. That's it for this video. I'm confident we will have a great 2020, learning about the markets, investing smartly, and hopefully we will outperform the market once again. Thank you for watching and have a great and prosperous 2020. Hey YouTube, this is the February 2020 update for Project 1 Million. In January, we ended December 2019 with about 168,000, and the portfolio value has grown over the course of the last month. We now have a bigger amount, and I made some deposits. Let's take a look at what happened to the portfolio during the last month. So let's take a look at the portfolio in detail. So I have Amazon at about 19%, Google, both classes of shares, at about 16%, and Facebook at 14%. So together, my top 3 stocks make up now about 49% of the portfolio, almost 50%. And then we have Visa at 8%, Booking at 6%, Alibaba at 6%, MasterCard at 4%, and Intuitive Surgical at 3%. So these really are the core holdings in my Project 1 Million portfolio, and together they make up about 76% of the portfolio. I have some of the S&P 500 index, that's at 3%. I have some Apple at 2%, Costco at 2%. And you can take a look at some of the other stocks I have here. This column shows the year-to-date profit that I've made on each stock. So you can see the different values here. I've lost quite a bit of money on Booking. This is probably due to the fears of the coronavirus, and that's why Booking as a travel stock has gone down. I've also lost money on Upwork. Upwork is a leading player in the freelance gig economy sector. I'm still bullish about Upwork, but it has come down considerably since I bought it. I think it's come down about 30 to 40% since I bought it. But I'm still holding on to my shares. I think it will bounce back. So let's see how that goes. So in total, I have a portfolio value of about $179,318. I also deposited some cash in January, and we'll get to that shortly when we look at the history of the portfolio. And so cash now makes up about 7% of the portfolio. I'm looking to deploy this cash soon. I'll probably only want to have cash at about 2 or 3%. So I got to spend, I think, roughly about $10,000. So I probably dollar cost average about $1,000 into some of the holdings in the Project 1 Million portfolio. I think I will probably want to increase my weightage in companies like MasterCard, which is only about 4% right now. And I also definitely want to increase my weightage in Intuitive Surgical, which is about 3%. So I'll probably dollar cost average into these two stocks first. MasterCard is a little pricey at the moment, so I will decide whether I want to hold back now or whether I'll just purchase the shares anyway. Intuitive maybe is a bit more of a bargain right now, so I might purchase a bit more of Intuitive Surgical, and I'm still very bullish on the long-term prospects of that company. A lot of the companies in Project 1 Million portfolio have reported their earnings. Amazon had a good set of earnings and the stock responded very nicely. It was up, I think, about 10% after the earnings. Google has not reported yet. It will report probably in a few days' time. But I don't expect many surprises from Google. The stock might go down 2 or 3% if revenue misses slightly or earning misses slightly. But long term, I think the picture is still solid. I think Google still has a very monopolistic control over digital advertising, and of course it owns Android and YouTube and a lot of other very good assets. Facebook had what I thought was a good set of earnings as well, but the stock didn't respond accordingly. The stock went down about 5 to 7%. I didn't pick up more Facebook shares on the dip yet because I already have a large allocation towards Facebook in this portfolio. But if Facebook drops maybe say another 3 or 4%, I might dollar cost average into Facebook as well. So in terms of some of the non-core holdings in Project 1 Million, I've mentioned before that I would like to add to my S&P Global position. It's still only 1%, but I haven't had a good price opening yet to add to that. I might continue selling put options for Upwork if the price goes down further. I don't think I will be adding to any of these other positions in the portfolio, but I'm keeping an eye on some other companies as well that I may add to the portfolio soon. So overall, the Project 1 Million portfolio was up about 0.6% year to date. So in terms of some other companies I'm keeping an eye out on, I've sold some puts on Trip.com. I've also put in some working orders for Uber, Under Armour, Twitter. I'm not really interested in buying these companies, including Trip.com, but I felt that some of these companies went down quite a bit, so it may be a good opportunity to earn some income through selling a put option. And if you're interested to know how to sell a put option, I've done a previous video on that, and you can check that out. I have put a buy working order for QQQ, which is the Nasdaq ETF. I definitely want to add some Nasdaq ETF into the portfolio. I've also put a buy working order for PayPal at about $113. Hopefully the price comes down to that, then I can buy some of that. Also put in a buy working order for Microsoft, and also put in a buy working order for MSCI. MSCI is a leading provider of index licenses. I've also put in a working order to sell a put option for iRobot, Intel, and this one is a bit interesting. Fitbit. Fitbit offers an arbitrage opportunity. Google has acquired, or at least has put out its intention to acquire Fitbit at about $7.35 per share. So right now, Fitbit is trading at about um, at a lower price. So it might offer arbitrage opportunity of about 10% or more. So I'm thinking about either buying Fitbit shares outright or selling a put option for Fitbit shares. So there might be some easy money to make. So I'm still thinking about it, and if I do decide to pull the trigger on that one, I will let you know in the next update. Also looking to get into Brookfield Asset Management. I find that as a good high quality company to own. AMD came down recently, I think after earnings, so I've put in a working order to sell a put option for that if I get the opportunity. I've also put in a working order to buy some Adobe shares if I get the opportunity to do that. And I've also been selling some put options on Baozun. Baozun is like the Chinese version of Shopify in China. And I have made some income from that already actually. And I will get to that shortly. So, over the last 30 days, this is what's been happening in the account. I deposited this amount at the start of the year, and then I decided to deposit another almost 9,000 here. I did that because for a few reasons. One was that the US dollar had come down a bit, so I was getting a good exchange rate. So I decided to add in to convert more into US dollars. Another reason is that some of this money was in a savings account, and I was not getting the kind of yield that I wanted on that savings account due to some complications. So I decided, why not I just put it into my investment account, and I think I can definitely get a much better yield without the complications. So, and then another reason is also I'm becoming more confident in what I'm doing and in managing my portfolio. So I decided to just add in this amount, 9,000 here. Besides that, I've been getting dividends. I got dividend from Disney. Okay, I had one put option contract that was assigned to me. So this is the first time this has happened to me. When I sold this, to be honest, when I sold the put option for Upwork at about, I think was 12.50, that was the strike price. I did not imagine that it would get assigned. I thought I'll just make the premium from selling the put option, but it did get assigned. Apparently there's a $20 charge or so when it gets assigned. So I got assigned 100 shares at the strike price of about 12.50. So I mean, the plan, it didn't really go as planned, but I don't mind actually holding those Upwork shares because I think it's definitely worth more than 12.50 per share in the long run. I think give it maybe the end of the year or maybe 1 or 2 years, it can probably go back up to 16, 17, $18 maybe. So I don't mind holding on to these shares. And I've also been selling a lot of other put options quite aggressively actually, because the China market has been affected a lot by fears of the coronavirus. And so I've been eyeing one company in particular, Baozun. So I didn't want to pull the trigger on buying the shares just yet. So I sold a put option again for Baozun, and I collected about $850 for that. So the strike price is about $30, and this is a very long dated put option which expires only almost 2 years from now. But I felt comfortable because if I'm buying this company for the long term. It's not just going to be for 2 years. It's going to be for 3, maybe 4 years, in fact. And I think Baozun is in a growing industry. Basically, it has provides e-commerce services, and e-commerce services are not going to die out in 2 years. It's going to be a long-term trend, and it will play out over several years, if not several decades. So I felt comfortable in owning Baozun for 2 years. Technically, I don't own the shares yet, but if they were to get assigned to me, I would own them then. And I thought $30 was not too bad of a price, and especially since I'm getting about a premium of $8.5 per share. So effectively, I'm getting the shares at about $21.50. So that's a huge discount to the current value. So I felt comfortable in doing that. And if Baozun goes down another 4 or 5%, I might sell even more put options on that. But I do need to be a little careful because like what happened here, an assignment could happen. So, and if I buy too many put options and if assignment happens, I may not even have enough cash for that. So, and I don't want to be over leveraged. So I will tread cautiously, but I will try to be a little smart about it. And if the market is overreacting to the fears of the coronavirus and pushing the valuation of these companies down, I might just sell more put options. So I bought more of Intuitive Surgical, paid about $1,000 there. I sold this other put option. This time, this put option was just expires in 1 year, but also at a similar strike price. Got $620 for that. Alibaba's valuation was also hit by the sell-off in the China market, so I decided to pick up more Alibaba shares. Trip.com was another stock that was affected, but Trip.com is actually something that might really be affected. It may not just be an overreaction, but I think the stock fell about 11 or 12%. And then I decided to put this working order for this put option, and then I think it fell another 2 or 3%, and that's when my put option got triggered. So it fell quite a lot before the put option got triggered actually. So I think I'm comfortable with that, and I think the strike price is way below the current price that it trades at. I think it trades at about $30 right now, and that's after falling about 14%, I think, and I get this premium of 230. So I got this dividend from Comcast and then the S&P 500, and yep, that's about it. So I mentioned about the options. We can take a look at that. So right now, so we can take a look at some of the options I have sold here. So I sold this Upwork option at about $100. Right now, if I to buy back that put option, I have to pay $147. So basically, I'm losing money on that put option so far, and I've lost 345 on this put option. Yeah, no, sorry, I have not lost 345. Sorry, I have not lost 147 either on this. This is the market value. So I've got $100, and then now it will be 147. So I would lose $47 if I were to buy back. So you would take the market value minus the premium I've got basically. So this one I'm making money on right now. This one I am also making a little money on right now. This one I'm losing a little money, and this one I'm losing a little money. So the important thing here is that the total market value of all these put options, if I were to buy them back, would be about 2,300. And so I have enough cash. If we were just to expand this a little, oops, what happened? Let's go back. Yeah, okay, let's go back here. Anyway, as you saw in the Excel sheet, I have about $12,000 worth of cash, and so I can easily cover that right now. So I think right now this is not worrying. If this goes to about 4,000, that may be a sign that I'm perhaps over leveraging myself and selling too many put options. But let's see how that goes. I don't think it will reach that level just yet. I'm still comfortable with the number of put options I've sold. And in the very worst case scenario, if all these stocks get assigned to me, I will have enough cash to buy them. For example, this would be $3,000 worth of cash. This would be 3,000, another 3,000, and this would be like 5,000. So that would be 11,000 there, and then plus another 2,000 plus, it will be 13,000 plus. But that is the absolute worst case scenario. If everything was assigned, I would need 13,000 to cover all of that. And I mean, over the next few months, I will of course be depositing about at least $1,000 every month, and maybe more if there are better opportunities. So I don't think I'm over leveraging myself just yet by selling too many put options. And I ultimately I use put options to buy companies that I would want to buy anyway, but at a cheaper price. So I'm comfortable in Baozun, for example. I think it's a good stock, and I think it will go much higher. Give it some time. And the same goes for Upwork. I think it was a good stock, and it will go up in due course. But I don't want it to take up too much of a proportion in my portfolio either. So perhaps I don't want it to cross maybe 5 or 6 or 7% at the most of the entire portfolio. So that's how I'm looking at it, and that's how I'm doing my risk management. So every month I compare my portfolio performance against the best indices out there and the best funds out there. So I compare against S&P 500, against the Nasdaq, against a fund called Berkshire Focus, against the Vanguard Information Technology ETF, and against the Expanded Technology ETF. So Project 1 Million has done about 0.6%, so we are beating the S&P 500, which has done about minus 1% year to date. Let's zoom in on that a little actually. So the Nasdaq has done about 0.6%. VJT and IGM have done about 1.9%, and Berkshire Focus has done about 3.8%. So that's where it stands right now. So every month I also compare Project 1 Million's performance against the Funds-Made Equity Fund. And the Funds-Made Equity Fund is also the inspiration behind Project 1 Billion. And if you're interested to know what Project 1 Billion is about, check out the videos I've done about Project 1 Billion. So let's take a look at how Funds-Made has done so far year to date. So Funds-Made manages about 18.8 billion. These are the top 10 holdings in Funds-Made. Microsoft is the top position, and Microsoft has been doing well, so I expect this to also do well. And so the year-to-date performance of Fundsmith has been pretty good actually, 2.7%, 2.71%, sorry. Although the S&P 500 is down and we have only done 0.6%, Fundsmith has done about 2.71% so far year-to-date. Last year we beat Fundsmith, so this year is still early days, but so far Fundsmith has the lead. So that's an update for Project 1 Million in Feb. I'm also replicating my portfolio on eToro, and if you're interested to look at my portfolio on eToro, copy my portfolio, or copy other investors' portfolio on eToro, please join eToro. If you use the link in the description tab, you can get $50 to start with, and I recommend you check out eToro. Thank you for watching and have a great day. Hey YouTube, this is the March 2020 update for the Project 1 Million portfolio. Wow, the last week of February saw a lot of volatility in the market. I'm already thinking of names, the Black Blue Week perhaps. Anyway, we have been busy buying more stocks for our portfolio, and we've also been selling some put option. Let's get into it. So this is how our portfolio currently looks like. We have the stock names here, and we have the portfolio allocation here. We have the total market value here, and the year-to-date profit or loss on that position over here. So let's run through quickly some of our positions. So Amazon is still our top position at about 18% and for a value of 32,000. Google is a close second. We have about 16% of Google shares in our portfolio. And Facebook is a third, close third with about 14% of the portfolio. So together, these top three stocks make up about 48% of the portfolio. Visa is about 8%. Alibaba is about 7%. We actually had the opportunity to buy more Alibaba shares during February, and we'll take a look at the stocks we bought in a bit more detail when we look at the history over the last 30 days. Booking is about 6%. Booking has taken quite a beating due to the fears of the coronavirus. You can see that it's currently at a big loss. But as is my style, I don't sell shares. But neither am I going to buy any Booking shares even at this depressed price. I think Booking still has some growth left in it. It still plays the long-term secular trend of travel, online travel. So I don't plan to sell the shares. We also had chance to buy Intuitive Surgical shares during Feb, and we also bought MasterCard shares. So Intuitive stands at about 5% of the portfolio, and MasterCard stands at about 5%. So as I mentioned, I think in my last update, I still want to bring up the percentage of Intuitive Surgical and MasterCard in the portfolio. So if the market goes down further, I will likely be buying more of these two companies. So I think in total, the top or the core positions in the portfolio make up about 79% of the portfolio. So the portfolio will rise or lose money based on these top holdings. I've highlighted this position, which is basically an index position, as showing the positions that are the core holdings, which are above it, and the positions below it, which are not yet core holdings, which may or may not become core holdings in the future, depending on the business prospects, my research into the particular stocks, and of course the price as well. So if you're interested in knowing what are the other positions in the portfolio, you can take a look. We bought actually some more Boeing as well during the month, and it's about 2%. These are some of the other stocks: Apple, Costco, Nike, Comcast, S&P Global, JD.com, Expedia, Welltower, Upwork, and so on. We actually bought some new positions as well. MSCI. MSCI is a leader in providing index funds, or rather, it provides the grouping of various types of index funds. I'm sure you've probably heard of the MSCI World ETF. So they are used a lot in the grouping of different kinds of ETF products, and they are the leader, and they have very big fat operating margins, which show they have very little competition. S&P Global is one of their competitors, and they are behind the famous S&P 500 index. But MSCI also leads in this space, and it has a lot of global ETFs using its name. And I'm quite bullish on the trend towards passive investing through ETFs. So that's why I decided to pick up some MSCI shares. Right now, it's still a very small position. It's just 1%. But if I feel that the price comes down more, or I'm more bullish about the stock based on my research, I might pick up more shares. We also had a chance to buy some Microsoft shares finally, and so that just makes up 1% of the portfolio. Microsoft, I like it because it's a number 2 cloud player. And then of course you have Office productivity suite, and it's a leading software company in general, and also it has this gaming component to it, and I think that will also go up, especially towards the end of the year when I think the new Xbox comes out. What I don't like about Microsoft and why it was not part of the portfolio earlier was because it's a dividend stock, and I generally don't like dividend stocks because it's very inefficient. I want my companies to reinvest their cash flows as much as possible and to gain higher rates of returns on those reinvested cash flows. So that's why I was a little hesitant to pick up Microsoft shares in the past. But with the big fall in stock prices, I thought I'll pick up some Microsoft shares. The other reason I pick up some of these companies is so that I become more interested in researching them even further. If I have no position in a particular stock, that makes it a bit difficult to research that company because I may not be that interested in researching that company. So I pick up some minor positions here and there so that I become more vested basically in that company, and so I become more interested in doing more research on that company as well. So we also picked up some PayPal shares. PayPal is probably a company that I would like to add on even further, and I hope we get the opportunity to do that. I also picked up some Triple Q shares, which is basically the Nasdaq 100 ETF. I also picked up some Twilio shares as well. Twilio is an interesting company. It's a leader in the communication platform as a service sector. I'm still doing more research into it, but I like what I see so far. I like the CEO, Jeff Lawson. I like the growth prospects. It has a very good revenue run rate. And I think it's also, and most importantly, I mean, whenever I buy a stock, the number one factor really is the moat, right? What's the economic moat of that company? And I think as more companies use Twilio, firstly, they become more used to its product, and so it becomes more ingrained in their systems. And secondly, I think as more companies use Twilio, it becomes an even stronger product because of the algorithm and the machine learning becoming smarter, basically. And that makes it a more compelling proposition. Something sort of like Google search engine, right? As more people type in their search queries, the Google search engine becomes smarter. The algorithm and the machine learning become smarter basically. Trilio has some aspects of that from what I have read so far, and so it's an interesting prospect. And I was looking to pick up more shares in promising smaller startups with good revenue run rates. Upwork is one of those as well, and so I've also decided to pick up some Trilio shares. So we also have FedEx at a 1%. There's some companies that probably will not be buying more shares of at all. Probably won't buy more shares of Comcast, Expedia, Berkshire. I probably will not buy more shares of. Even if I do think Berkshire Hathaway is a bit undervalued, it does not fit into my kind of profile for the portfolio that I'm trying to set up, which is based more on good as a reasonable cost and strong companies riding good secular tailwinds. So I'm losing a bit of confidence in FedEx, and I probably will not be adding more to my FedEx position, because I think, first of all, Amazon is becoming a strong logistics player as well. So the moat of FedEx may not be as strong as it once was. And finally, we have some cash at about $2,579, and we have a total portfolio value of about $173,444. So overall, year to date, the portfolio is down minus 2.67%. If you're interested to know how I do this calculation, basically the formula is right here. So instead of using month here, I use year. So that is how this is calculated as of the beginning of March. Let's take a look at what exactly happened for the portfolio in March. So didn't really do anything for much of the beginning of Feb, except we sold a put on the 10th of Feb here. We collected $75 for this put. I'm still selling puts on Upwork. I know I had one put option that was assigned to me, but I'm still bullish on Upwork on the long term. And I think in the fourth quarter, it actually did decently. I think it managed to clock 20% or near 20% revenue growth rate for the fourth quarter and also for the full year. And I think their goal is to maintain that for the next few years. So let's see if they can do that, and be holding on to my shares. So I got this dividend from Apple, got this dividend from Costco, and then around 24th of Feb is where the excitement started to begin. So I bought 9 shares of Trilio, then I bought 4 shares of MICI, and then I think 26 is where the crisis deepened, and then I bought more shares of PayPal, about 10. So I bought for the first time actually 10 shares of PayPal. As the crisis deepened, I thought I would sell a put option on Carnival Corporation. So Carnival Corporation is one of the largest cruise companies out there. This is stock I think Jeremy from the Financial Education is also quite bullish on. So in a nod to him as well, I decided to. I didn't want to actually buy the shares themselves. I thought I'll sell the put option instead. As it turns out, it seems I sold the put option a little too early. I could have collected almost double the amount here, based on what the current market price is. But that's the way it is. I also bought more Mastercard shares. I bought more Intuitive Surgical. This actually was a bit of an error. I thought I had not put this working order in, so I got to be more careful about that in future. I should have put this working order at a much lower price, maybe 520 or something like that, and it would have been executed. Instead, I bought it at 550. So there was a bit of a human error involved there. Anyway, I bought more Microsoft shares, about 7 more Microsoft shares. I bought some Boeing shares. And I think MasterCard particularly fell a little stronger than some of the other stocks because there was a change in the CEO. And to me, I don't think that's a big factor. I mean, it's more important to invest in a good business than a good manager. And I think the business is still as strong as it has been. So I don't see any long-term implications of the CEO transition. So I bought more shares of MasterCard. Then I sold more another put option on Upwork, and I collected 275. So selling all these put options have actually mitigated the decline or the percentage decline of the portfolio, but it does come with risk, and I'll talk about the risk shortly as well. I bought 5 shares of the Triple Q index, and I sold a put on Under Armour here, and I sold a put on Wayfair. Wayfair was a bit surprising for me. I didn't think this put option would get executed, but it did. Wayfair is a leading online commerce player for home goods. Basically, it's like the Amazon of furniture and other home goods. And so I think, I don't think it's going to be destroyed by Amazon because Amazon focuses more on some of the smaller products. They could move into that space, but I think Wayfair has established a strong presence within that category. So they fell hard after their recent earnings. They fell about 20%, and that's why this put option got executed. But it does come with risk. I'm selling 100 put option for 100 shares, so I would need to buy 4,500 worth of Wayfair shares if the strike price hits below 45. But for my efforts, I did collect $720. So I did mention there are some risks towards selling those option contracts. So in totality, these are all the open option contracts I have right now. They are valued at about $4,110. So this basically means that if I were to buy back all these option contracts today, I would need to pay $4,110. And I'm a little over leveraged because if you remember from the Excel sheet I showed, my cash is only about $2,579 at the moment. So I don't have the cash basically to buy back all these put options. But I'm planning to add in another 2,500 at least to the account over the next few days. So I'll bring up my cash to about 5,000. So I should be able to cover this. Of course, this market value of these put options could go much higher. They could go 6,000, 7,000, 8,000 if the market continues to fall and these companies in particular continue to fall. But in general, these are all companies I want to own. Upwork is a company I want to own. Wayfair, I'm still doing more research about it, but generally I feel I'm okay with owning $4,500 worth of shares if it comes to that. Also for trip.com, at this price, $25, I'm gonna probably be okay with owning $2,500 worth of trip.com shares. Even carnival.com, sorry, not .com, Carnival Corporation, I will have to buy $3,250 worth of shares. And right now, actually, the strike price is around here. So, and you can see that the market value of this is about $625, whereas I got only premium of $385. So I was probably way too early on this. But I still think that Carnival has been beaten down a lot because of the fears of the coronavirus, and it probably could go up another 5-10% once those fears subside. And so then this would not be a very risky put option. And Baozun, I'm quite bullish on for the long term. Is the so-called Shopify of China, so I don't mind owning those shares. In total, I calculated that if there was a doomsday scenario, markets fell by 5-10% more or so on, and then maybe these companies fell below their strike prices significantly, and meaning those put options would get assigned. I would need about $24,000 to buy all those shares stated here. So, and my cash is only going to be about 5,000 soon. So I am over leveraging myself a little, but that was actually quite deliberate. I wanted to add a bit more leverage into this portfolio. I did not want to borrow money because I didn't like that kind of leverage. I wanted to sell more put options, get premium, and use that premium to buy more high quality stocks. Uh, that was the kind of leverage that I'm a bit more comfortable in. There is a downside to that, like I mentioned. If the market really collapses, and these companies in particular collapse, I will be on the hook for about at least $24,000, and so I'll need to cobble up that money and make sure I have enough money to buy up those companies if that happens. What I try to do is I try to monitor the market value of the put options. So, and I try to keep my cash value at or around near the market value of those put options. That's just how I try to limit the risk on that. So every month I compare my portfolio performance against the best ETFs and the best funds out there. So I compare against the S&P 500, the Dow Jones, the Nasdaq, VJT, which is a technology ETF, IGM, also a technology ETF, and a fund called Berkshire Focus. So let's take a look at how we have performed compared to these funds. So the Dow is down 11%, almost 12%. The S&P 500 is down about 8.81%, and the Nasdaq, the VJT ETF, and the IGM ETF are down about 4.78%, thereabouts. And Berkshire Focus actually is still doing well. It's done about 3.67% year to date. So I think this is probably the first time that we are beating all the ETFs. We are down about minus 2.67%, as I mentioned. We're still losing to Berkshire Focus Fund though for the year, but we are beating the ETFs. One caveat though is that we are using a little leverage, as I mentioned, in terms of selling those put options. So that is one part of the equation in terms of how we have managed to beat the ETFs so far this year. Let's take a look at how our friend Terry Smith is doing as well. So this is Fundsmith. Let's take a look at Fundsmith's performance year to date. So Fundsmith has done about minus 4.36% so far this year. So we are beating Fundsmith as well. So generally, I think I'm pleased with the performance of the portfolio so far, and I will definitely be picking up more shares if the market continues to tumble. I'll be depositing more cash as well. One worrisome factor is if all those put options get assigned, but I don't think that is too likely. I probably will not sell as many put options going forward, and I plan to also keep some cash outside the account, but as a reserve in case I do need to buy those assigned shares. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video. Hey YouTube, this is the April 2020 update for Project 1 Million. This will probably be the last update. The markets are too volatile for me. I don't know what will happen with the coronavirus situation. I am going to liquidate all my positions and I am going to buy a house and just rent it out and get rental income. I can't stand the volatility in the market. Long-term investing is not for me. April Fools. If you know me, you know I love investing and I am a long-term investor. And the best time to invest is during a bear market. I don't know when the bottom will be, but I buy on the way down and I enjoy the fruits on the way up. I have been buying a lot in March and I can't wait to tell you about it in the April 2020 update for Project 1 Million. So at the end of March, this is how the portfolio looks like. I took the opportunity in March to diversify the portfolio a little, and I also took the opportunity to buy into certain stocks that I have been eyeing and also some ETFs that I've been talking about in some previous videos. So my top 3 positions are still more or less the same. Amazon, Facebook and Google, and they make up about 44% of the portfolio. I took the opportunity to buy more heavily into Intuitive Surgical, so this has pushed it up to my 4th biggest position right now, along with Visa. I also bought some Baba and I also bought some MasterCard. And Booking has had a terrible time. Booking is right smack in the middle of the current crisis in terms of being a leader in travel bookings and travel in general. So I expect Booking to take a beating. I'm not selling shares, that's not my style. And I know Booking will recover eventually as well once it becomes normal to travel again. And I'm sure that they will come. So these are my top 8 positions at the moment, and together they make up about 73% of the portfolio. I decided to use some color coding this time to just show you different aspects of the portfolio. So the one in green are basically my top holdings at the moment. I also hold some of the S&P 500 ETF that's in yellow. And so anything above that ETF, this is basically the benchmark that I aim to beat over the long term. So anything above that is a core holding which I'm pretty confident will beat the benchmark. And anything below that is not yet a core holding but could become a core holding. And the ones in blue, they're not core holdings yet, but they have a significant percentage, 2%, not that big but not that small either. So I decided to highlight them in blue. So I also took the opportunity to buy some other stocks, like I wanted to buy more of S&P Global. I wanted to finally buy into Adobe, and I got the chance to do that in March. I also bought a little more of Boeing. Boeing, again, like Booking, is right smack in the middle of this crisis. But again, I expect once air travel becomes normal again, there are only 2 major aircraft manufacturers, Boeing and Airbus, and between the two I like Boeing a bit more. So I think Boeing will bounce back as well over the long term. But this is probably something you have to hold for 1 or 2 years or 3 years at least to make a decent return on it. I also took the opportunity to buy into MSCI. MSCI might become a larger holding. I also bought Autodesk. Again, I like Autodesk. It reminds me of Adobe, but it's a little earlier in the transition towards a subscription business model. So that's one reason why I feel it has a lot of potential. So I may add into my Autodesk holdings if the price is right. I also bought some PayPal, new position. I bought more of the Nasdaq QQ ETF. Trilio is relatively new position as well. I also bought into the expanded tech ETF, and I always include this in my monthly comparisons. And so I decided, I think for much of last year it was beating my ass, so I thought, why not just buy some of it as well? So I bought into that. I also bought into Microsoft. I don't like Microsoft because it pays a dividend, but I do like Microsoft because it's the number 2 cloud player and number 1 in office productivity. And so if the price goes down, I might buy even more of Microsoft. I also had a chance to buy into a Semiconductor Etf, and I think that's an interesting field. The likes of AMD, Nvidia, Intel, of course. So something I wanted some exposure to. I also bought into a SaaS ETF, a software as a service ETF. There are a lot of promising players here, and I don't understand them all too well, so that's why I decided to just buy an ETF, so I get exposure to a number of SaaS players. Another interesting pick, I think, is Beyond Meat. Now, Beyond Meat was actually a company that I was critical of earlier when, the price was skyrocketing and so on. But the price really fell, and I understood the business a bit more. The thing about Beyond Meat is it's not the type of company I would usually buy, because I don't think it has a strong moat, actually, like some of the other companies I have, like Facebook, Amazon, or Google. I think they have very strong moats. Beyond Meat is basically just selling a commodity, a product, and anybody else could copy that product perhaps. But I do think there is a big trend towards more plant-based eating, and I do think Beyond Meat, along with Impossible Burger, is probably the leader. And so I think there will be a number of successful winners in this field. And I think Beyond Meat will also partake in that success. Although it may not be a runaway success, I think it will definitely grow over time. But I'm being very cautious with my purchase price with Beyond Meat. So only if I see a good price, and then I only buy more if I see an even better price than that. And other than that, I'm just okay to just hold a minor position in it. And of course, I'll research a bit more on it, and if I get more confident in it, I might even buy more of it. And so we have cash at about 3,000, and our total portfolio value is about 180,000 plus. So this portfolio value is even more than the portfolio value at the start of March, and that's because I've been adding a lot of cash in, and I've been buying a lot of stocks in March. So let's run through what I've been doing in the account. So towards the end of February, I already started buying. Of course, now that I know that the market would have fallen much more, I wish I had bought more when the market had actually fallen to its lows rather than at the end of Feb. But we don't know. I don't know. The market could fall even further from here. So what I do is I just keep buying the more the market falls. And I think that is a strategy that will serve me well in the long term. I've also been selling a lot of put options. So I've been putting in money, so on here. Then I think the market fell more, and I bought more stocks, as you can see here, put in more money, and I think the market fell even more. and I bought more stocks here. Even picked up Boeing at $160. Yep, and the market fell more. I sold some puts. So I think selling puts has been my way of profiting from the fall in the market. Some people like to short sell, and I am not the short seller. I don't like that. But I think I can still make money when the market is falling, and that is by selling put options. So I've been selling a lot of put options, and then I also use that premium, and then I buy even more stocks, which is what I've been doing here. And I picked up, for example, Beyond Meat at $54, which I think is a decent price, but we don't know yet. Bought Adobe, bought Autodesk, so on, putting more money, bought more stocks. So far, this seems to have been the bottom when I bought PayPal at about $82. But we don't know. I mean, I could see PayPal at 75, 65 one day. I mean, the market could fall another 15-20%. But I will be adding in money and I will be buying more stocks as the market falls. Let's take a look at the options. So basically these are all the open options I have at the moment. Some have not been very good bets, some have been decent bets. I'm not sure yet whether I'll make money off all the option selling at the end of the day. So far it seems to have made an impact, and I'll show you that later in terms of the year-to-date return of the entire portfolio. So you can see in the upward here, iRobot, Trip.com, some Under Armour, Wayfair, Uber, Square, Welltower, Carnival, Baozun, Brookfield Asset Management, and Fit. So right now I have open position value of about $12,000. So if I would buy back all these put option contracts that I sold, I would need to cough up 12,000. That's the difference between the net liquidating value here and in the 180,000 I showed you in my Excel file in terms of my stock positions. So my stock positions, they add up to 180,000, but when this platform calculates a net liquidating value, they minus off the open options contracts. So that's how you get 168. But eventually, I mean, most of these put options could expire worthless, so meaning I mean I get to keep the premium basically. I think in total I've collected about roughly 8 to 9,000 in terms of premiums, and but of course in the open value of the contracts is still 12,000, so I'm still losing money on the put options I've sold. But as time passes on, as the market goes up, hopefully this value will come down, and it will come down quite dramatically maybe. I think at the height of the crash, when the market was bottoming, this was about 18,000. So that did get a bit worrying, because some of these stocks will definitely be assigned in the end, so I'll need to put in the money, especially stocks like Carnival. I'm not that keen on actually holding them long term, or even Wayfair, but I thought I could make some money by selling put options. But if push comes to shove and I have to buy them if they are assigned, then I will have to come up with that money. So, but nothing that will really break the account. I mean, in terms of having to buy something if it is assigned. So I try to make small bets. So small bets that I can afford, basically. So let's see how that turns out in a few months. So let's look at the performance of the portfolio year to date. So basically this is the ending value at the end of the month. This is the starting value at the start of the year. This is how much money I've added throughout the year. 0 withdrawals, and then you just divide it over the starting value plus the additions over the year so far. So at the end of the day, we get a value of about minus 8.21% year to date. And if you want the minus off the open contracts value from the total stock value, then you get about minus 14%. So with leverage, basically consider the the open option value contracts leverage, because I'm not putting up money right now. So generally, I think this is a decent result compared to where the markets are. Let's take a look at the markets actually. So I have the S&P 500, I have the Nasdaq, I have the IGM Expanded Tech ETF, the Vanguard Technology ETF, and Berkshire Focus. I forgot to add the Dow, so let's add that in. Okay, let's take a look at this. So the Dow has been, in the dumps basically, is down about 23%. So I'm clearly beating the Dow. I'm also beating the S&P 500. The S&P 500 is minus 20, almost minus 20%. The Nasdaq is done pretty okay, is minus 13%. The two tech ETFs, minus 10, minus 11. So I'm beating them without, if you include the leverage. And I'm losing out to Berkshire Focus so far this year, but I'm beating almost everything else. Let's take a look at our friend at Fundsmith, Terry Smith, how he is doing. Terry Smith is doing not too bad actually, minus 7.87 year to date. I think it would be a bit misleading, because actually I think the pound has fallen quite a bit. So that's why it is not as bad as it looks. I think the pound has fallen maybe for 3 or 4% at least. So if it was currency neutral, maybe this would be minus 10, minus 11%. But anyway, I think he has done decently as well. In fact, he is beating Project 1 million at this point of time. If you're interested to copy me on eToro, this has been the performance so far for March, minus 8, and year to date we're minus 12. So this is purely buy and hold without the leverage that I have in my Project 1 million portfolio. I was a bit unlucky with the timing of this portfolio. If I just started a few weeks later or a month later, I think the portfolio performance of this will be dramatically different. But anyway, it doesn't really matter. A few months or a few weeks doesn't matter, because this is going to be a long-term portfolio for many years to come. If you're interested to copy me, head over to eToro and you can copy this portfolio, which basically replicates the portfolio in Project 1 million. Every quarter, I also look at the best performing or the worst performing stocks for that quarter. So let's take a look. We have Amazon, we have Google, Facebook, Intuitive Surgical, Visa, Alibaba, MasterCard, Booking. These are the core holdings currently in my portfolio. So let's take a look at Booking. Has been down almost 36%. It's been really beaten down. Purple, what's purple? Purple is Facebook. Facebook is also down about minus 20%. I think this is Google. Google is down about minus 15%. Alibaba is down minus 9%. Visa is down minus 11%. Amazingly, Amazon is actually up for the year. It is up 5.51%. So luckily I had Amazon at the top position, and it was just, I think, coincidence. I do like Amazon a bit more than a lot of these other holdings, but it's a good thing Amazon has stayed strong. And the way the crisis has unfolded is just the fact that you have to rely more on some of the services that Amazon is going to provide, like e-commerce. And I think the one that is not getting enough headlines is actually cloud computing, because people are going to watch Netflix, and Netflix is hosted on Amazon Cloud. And so Amazon Cloud is actually going to see a lot more business as well, and that will probably be good news for Amazon going forward. So that's the update. I don't know where the markets will go from here. I don't know how long this virus situation will last, but I'm an optimist at heart. I'm confident we can overcome it. But my strategy is basically a long-term investing strategy. I will buy and hold, and I will buy more as the market dips. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.